I would request Vinod Agarwal sir to escort the faculties to the dais. We have come to the last session of the conference, which is a panel discussion on nuisance in liquidation framework. I would like to thank Sunit sir and Ahmedabad branch to give me this opportunity to introduce Ritesh Kavdia sir. So, Mr. Ritesh Kavdia sir is Executive Director in IBBI since 1st February 2018. Earlier, Mr. Kavdia sir has been serving at the IBBI as Chief General Manager since December 2016. Mr. Kavdia sir is an Indian Telecommunication Service Officer from the batch of 1996. He completed his Bachelor of Engineering degree from Regional Engineering College, now NIT, Jaipur, and has completed Executive Master of Public Administration from Syracuse University, USA. He also has concurrent certificates of advanced study in leadership in international and non-governmental organizations and e-government management and leadership from Syracuse University, USA. Mr. Kavdia sir has 23 years of experience with him in the areas of management and public policy. Before joining IBBI, he has served Ministry of Defense, Government of India as Director. So I would like to request Vinod Agarwal sir to welcome Ritesh sir with memento. Next, I would like to request, I would introduce Nipun Singhvi sir, who is a practicing advocate, FCA, CS, LLB, LLM, corporate law, certified forensic IFRS bank auditor, qualified independent director, executive program on mergers and acquisition, IIM Ahmedabad, qualified insolvency, examination IBBI. He has delivered more than 1,600 lectures on various laws and across 70 cities in various institutes and associations and regular author of various corporate journals. He is an expert on corporate, commercial and insolvency laws. He has advised and handled 650 plus insolvency cases having debt more than 1 lakh crores, and important cases includes JP Infratech, SS Steel, Swiss Ribbons, and many more. So next, I would like to request Vinod Agarwal sir to welcome Nipun sir with memento. Next on our panel discussion is Pooja Bahry ma'am. Pooja Bahry ma'am was the third women insolvency professional in India and has been handling cases under IBC since early 2017. And she is on the panel of most of the banks and financial institutions as an IP under the IBC. She is an alumni of Shriram College of Commerce, Delhi University, and is a gold medalist. She has assisted more than 47 banks and financial institutions in over 3,200 cases to resolve turnaround cases and recover approximately 11,000 crores under SARFAESI Act. She has successfully handled 7 cases under IBC, and even during the COVID period, 4 resolution plans had been approved in the cases being handled by her. In fact, various landmark jurisprudence have been formed in cases handled by her under IBC. Now I would like to request Vinod Agarwal sir to welcome Pooja ma'am with memento. So today's moderator is Ravi Kapoor sir. So Mr. Ravi Kapoor sir is a postgraduate in commerce, a fellow member of ICSI, postgraduate diploma in intellectual property from National Law School of India, Bangalore, and insolvency professional, and has also cleared CAIIB examination. With initial exposure as a bank employee, he shifted to private job as company secretary in 1989. After working with corporate for 7 years, started his individual practice in 1996. So I would request Vinod Agarwal sir to introduce, to welcome Ravi sir with Memento. So I would request Ravi Kapoor sir to take up.
Thank you. Well, we're already running late, so I will not take much time. The topic of the day is nuance in the liquidation framework. Nuance by itself means a small difference, and that's the difference I think which is being interpreted differently, but at different forums and at different judicial processes also. With the introduction of the IBC, a lot of amendments have been carried out based on the practical experiences which we faced. There was a judicial issues where the courts pronounced certain judgments which led to certain amendments. Even the committees formed for evaluating the process which is being going on. All those led to different modifications in the law and fresh notification and amendments were made in the law. Well, everybody is aware that the Rainbow judgment entirely shook the entire basis of the IBC, which led to a lot of issues being coming up. Even the members of the committees were of the view, especially the liquidation process, that since appeal has been filed by IBBI, let's for the review petition to be decided before we start discussing the amount as per the new regime decided by the Supreme Court. Now, a recent judgment has put a question mark this. I am not getting into details of this because we have panel members to discuss on those matters. So while we are debating and continuing to discuss on the various issues which are coming up, we also have to keep an eye on what is happening globally. I was surprised to read an article the day before. Michigan City in US has filed for insolvency. The Municipal Council of Municipality. Similarly, in Birmingham, the local government, local council has announced bankruptcy. So this is how the things are moving outside India. So obviously the regulators will be keeping an eye on what's happening around, and days will not be far when we also find out municipalities and councils being recognized or given a referendum against the way the freebies are being distributed. So I'm sure that one day government will not be far off in thinking that whether this organization should also fall as a part of an IBC. Before I go to the panelists, one point which there are various issues like selling of assets are going concern, what happens during a liquidation process for a scheme of arrangement, I think which we'll discuss with the panel and try to find some solution or some answers to those problems which could be a guiding factor for all of us here. But one factor which I'd like to just flag off is always bothering, and maybe the organizers to debate that is going on, especially with respect of corporators which go to start the CRP process with no assets available. We find that the liquidators or the professionals even find it difficult to meet the expenses, let alone the fees which is coming to them. While the NCLT in few cases have terminated the process, my thought process was whether we can incorporate something in the Act itself, where in the court itself, where the RP or the COC can decide to terminate the process. In one of the cases where I was associated, one of the large PSU bank decided to withdraw their claim where the corporate enter. I fully agree with their view because when they realize there is no asset to be realized, why I should continue part of CRP or the liquidation process, because there is nothing more than contributing expenses to the CRP. So in such a situation, day before yesterday I received a notice, three policemen landed in my office with the case someone has filed in Delhi in 138. Again in this company, the litigation is going for 4 years, there is no assets available. So this kind of issues do crop up for professionals. So there's a thought process which came to my mind as I told you, there was nothing whether in such kind of cases, like 12 we have where COC can decide to withdraw the process, whether in such a cases there are no assets are available. Whether we can have a provision in the court itself to ensure that everybody's cost and time is saved, and at least we are not helping the promoter to escape the entire difficulties which he will not face had the CRP process or liquidation process or dissolution would have been completed. With this few opening remarks, there are a lot of issues they discussed. I think we'll go with the issues and discuss the panel. First to Sir Ritesh, especially on these rainbow issues. As I mentioned in my opening remark, there are question which COC or the liquidation team raised, whether we should, when the asset is sold and review petition is pending, whether we should distribute the amount or wait for the review petition to be decided. And now with the recent judgment in Bankruptcy, whether how and what call should the COC or the liquidation take, and any other issues related there, if you can have throw light on it.
Thank you, Mr. Kapoor. First, I would like to comment on your initial remarks regarding where there are no assets. In the last November, we had a colloquium with all our stakeholders, including all NCLT members, and where we deliberated many issues, many professionals also participated in that. And these sort of issues, were discussed. The real solution is not to withdraw the case. This colloquium recommended that there should be a provision of direct dissolution. During a CRP, if there are no assets, the COC can recommend for direct liquidation. But if there are no assets to be liquidated, even the COC should be able to go for direct dissolution. Even NCLT, by its inherent power, in many cases have gone for direct dissolution, and that should be the solution. There is no point of keeping a zombie company alive just because no one is ready to fund the liquidation cost. The real solution is the direct dissolution provision that this colloquium has recommended, and we hope to see an appropriate amendment in the code enacting such solutions.
So my only issue was dissolution is effective, but courts are also in one of the hearing agendas. It was mentioning that why dissolve the company and leave the promoter? Why not terminate the process by itself so that of the CR?
Basically, if the you can say the liabilities of promoter are for something deeds which happened in the past, so that answerability, that liability remains. In the intermediate, the IRP comes, when the IRP is looking after that, you see the for fixing the accountability of the promoter, we require this company to remain alive. That should not be the case. But next, your question was regarding the rainbow judgment. In the rainbow judgment, of course, still some debates, but Honorable Supreme Court has, in the further case of I think Kashmir, has clarified that this was a case-specific direction. In any case, a liquidator should be guided by his own judgment. If he has not admitted the claim as a secure creditor and that has not been challenged, there is no question of holding back your you can say distribution. If you have admitted them not as a secure creditor, and then that party has challenged the position and there are some directions in the NCLT, then of course one should follow the directions. It's a very, very case-specific situation. But as far as rainbow judgment is concerned, Supreme Court has clearly clarified that that was a particular case-specific direction. So at least that should not be a reason for holding any distribution.
But what would be your opinion now upon the judgment of us coming in? The court has said it will not apply, in fact, to the 53 distribution. Whether we should can now follow with this distribution as per the old design, or whether we should still abide by the rainbow outside.
Basically, if as a liquidator you have admitted the claims as a secure creditor, then you have to 53 remains the same. Whether you have admitted them as a secure creditor or not, that is the question. If you have admitted them as a secure, as a government dues, and they are agreed and they have challenged, then you have to, and of course while admitting there must be some direction from the NCLT. It's very, very case specific. You cannot apply it as a formula. If life was so simple, we would not have needed professionals to apply their professional wisdom on that.
So what I understand from you is that what is the status of claim at the time of admission should be the basis of considering distribution rather than subsequent judgment. Appreciate it.
Of course, if a party is aggrieved, the party has choice to go to NCLT to challenge your decision as a liquidator under section 42, I think.
Basically, otherwise, they have to seek direction from the NCLT to be on the safer side rather than taking his own call. My next question is to Pooja. Pooja, remember Regulation 37A is permitted liquidator to assign transfer his assets, even the profit transactions. So just wanted to understand your feedback or any experience you had on that part. And secondly, there is also issue of relinquishing the rights by the secured creditors. Can just give your experiences on those two aspects.
So, I hope you can hear me. So, Regulation 37A was when it was introduced, it was thought that it would actually be the end of the liquidators' problem, especially with reference to not readily realizable assets, which could actually, whether there were any assets, whether it was a contingent asset, or if any recoveries which you thought could be made from the avoidance application, so that would be assigned by the liquidator. But I think everyone would be aware of the latest judgment which has come of, the Rain Automotives in the Maya Gupta matter, wherein it has been adjudicated by the NCLT Delhi bench that unless and until an avoidance application has been adjudicated, it cannot be assigned. So in that particular matter, there were 3 avoidance applications which had been filed, and recoveries of about 26 crores were to come from that. And the liquidator assigned those for 50,000 rupees to someone. So what the court has taken a stand that it is only the RP or the liquidator who can actually file an avoidance, who can pursue the avoidance, and they are the only ones who can actually pursue it. Still, it is adjudicated upon. So yes, this is a problem because in a lot of matters, 37A was being thought that if you have an avoidance, because what was happening, it's been almost about 2 or 3 years, not many avoidance applications were getting adjudicated upon. So the liquidators were thinking that yes, NRRA can be utilized in section 37A, so that at least the liquidation can end, because some amendments had also come from IBBI that who would pursue an application for avoidance once you have filed an application for dissolution. So leaving aside, I think my matter in which the MCA had ordered an investigation and that dissolution cannot be allowed till the MCA investigation is completed. But because of that, I think the IBBI had come up with clarification that who would be pursuing that application. So it was thought that yes, there would be somebody who would be pursuing it after the dissolution has happened, because that's also. But now with this new order which has come, so it is. I think the liquidations the timelines would extend to a very, very large extent. But also the court has also said that yes, there is a problem in the valuation. That how do you? They say what NCLT held was that till the application is actually adjudicated upon, then for what value would a liquidator actually assign them? So like in this case, for 26 crores has been assigned for 50,000 rupees. So the court said that no, it is not right. This particular, so once it is adjudicated, then only what money has to come from the avoidance, then only it can be assigned as an NRRA if the liquidator wants to do so. So that actually also means that till your avoidance is adjudicated, your liquidation cannot end. So the timelines of liquidation will extend to a very large extent. So this is the recent order which has come. And the second question, sir, was asking about Regulation 21A. This was about secured creditors. About presumption of security interest. Now basically 3 timelines have been given when we talk about presumption of security interest. So one is the secured creditor within 30 days has to tell the liquidator within the liquidation commencement date, is he relinquishing the security interest to the liquidator or not? So that is when you're filing the claim. By the 30th day, the creditors have to file their claim. So if a creditor has not informed the liquidator, that whether he is relinquishing or not the security interest, then it is presumed that that security interest is relinquished to the liquidator. So this was very clear. So then there were two other timelines, and one major timeline was with reference to 180 days, that whatever a secured creditor supposedly does not relinquish the security interest to the liquidator, so within 180 days he had to give to the liquidator the excess which he has realized from that asset. So now there was this latest judgment of the MPS exports in ICICI Bank matter which just came this month, wherein it has been said that it was with ICICI Bank versus MPS export, and the bank could not actually realize the security interest in 180 days. So the court has actually now ordered that that asset will now become a part of the liquidation estate of the liquidator. So it is a very, very good judgment when it comes with respect to in liquidation, that because there were a lot of problems in the initial stages wherein the secured creditors were not informing the liquidators whether they are relinquishing or not. So 21A was actually a boon for all the liquidators, that and now the judgments, this is one of the first judgments actually come under 21A. So if a secured creditor is unable to realize the security interest and give the excess if there is any to the liquidator, then that asset again becomes a part of the, even if it is not relinquished, it becomes a part of the liquidation estate, and then the liquidator will take steps to recover. So this is the latest jurisprudence with reference to.
So on the first question, there are a lot of liquidation process where company has filed litigation for 138 also, and the Insolvency Act. Can we take a view that in those cases one will have to wait till those cases are disclosed, or the regulator will have to assign at least those cases to someone and go with the resolution process?
So 138, if I'm not mistaken, will be for criminal. So now criminal, and this is, I mean, this order which has come is specifically for any underlying avoidance transactions, what money has to come in, whether it's through preferential, underlying, or fraudulent. So this is only specific, I mean, as per my understanding, only specific to any amount, any clawback which has to come. So the court has said that needs to be crystallized, because they said there is no, I mean, they've taken a very a view which is, it is a very strict interpretation of the regulations. Now what they have said is that liquidation estate consists of only amount which can come back. So how do you know what is going to come back? And one important aspect which they also said was that it is for the benefit of the creditors. Now liquidation, the section 53 is for value maximization for the creditors. So any amount which comes in should be for the benefit of the creditors. So they are saying that this is like basically it's an avoidance application which is filed for the benefit of a third person. He's the one who will, if there is any money which comes in, that is that third person who has bought those assets 50,000 vis-a-vis 26 crores is the one which he's the one who's going to get the benefit. So there is some merit, but the fact is it makes the life of liquidators very, very tough, because the liquidation now seems quite unending till the applications are adjudicated of avoidance.
Yeah, thank you. Then next question is to Nipun. Nipun, there are different ways by which we can sell the assets, including on the going concern basis, and especially there is always a question mark whether the sale of asset through going concern basis will have benefits which will derive within the resolution plan. So that's one. And second question, which follows up with regarding the liquidators' position, especially in respect of third parties like ED and other teams being involved, with respect to the fact of Section 32A coming in. What are your views, or what would you like to do?
I think the first question is very ticklish, and in fact we have been struggling, and we got some judgment also on this aspect of going concern sale. Basically, if we go by the regulation says there could be a going concern sale in two parts. One could be as a business, one could be as a CD as a going concern. Now when I talk about CD as a going concern, I read it with probably a question of scheme of arrangement, wherein the time limit was capped as 90 days. And now recently the ICAI has amended the schedule, and now they say that for the first auction exclusively it has to be a going concern. So some clarity is there that now you can go for a going concern sale. at the first auction. However, and this is open for interpretation, that subsequent auction can it be a going concern or not. So view taken by again NCLT principal benches, even in subsequent auction you can go by going concern sale coupled with other options. So that is one of the form that how a going concern can take place. Second is whether going concern has to be within 90 days. So law says that if scheme of arrangement is there 90 days, first auction probably it comes to 90 days. But we have got many cases now for the study where even beyond 90 days NCLTs are permitting going concern sale. So I think if you go to NCLT and get an order beyond 90 days, somebody is going to come and buy the asset. So going concern sale is always a beneficial thing wherein some more benefits can come in. However, there are some areas which are beneficial for a resolution plan and where going concern sale cannot be created. One of them could be a carry forward of losses, which is a thing everybody wants to buy and get a set off. But that is possible when companies sold under resolution plan. But recently I have seen some models of going concern sale. I think recent one was by NCLT Kolkata, wherein they have permitted the carry forward of losses also. So it is again subject to interpretation. I suggest that IBI may come out with clarification that whether these all benefits can be granted or not. Because again, it is going to be a cat and dog game. During the going concern sale, everybody is filing applications to get relief and concession from the court. And all the courts are interpreting it in a different manner. Some courts are giving reliefs and concessions. Some are saying that we can't give reliefs and concessions. So that is going to be a bone of contention as far as going concern sale is concerned. Secondly, sir, as an attachment issue, so I have been representing and now the matters are before Supreme Court. So there are three situations as far as the attachment issue is concerned. So enforcement directorate normally annexes the asset and that is what 32A was brought in. And we were very happy when it was brought in 2019 that after this there will be no issue and we could sell the assets under CIRP or liquidation. But the question which is now pending before Supreme Court is that suppose the attachment has been done pre-CIRP and pre-amendment of 2019. Then whether that attachment will go or not is subject before court. Second, suppose the attachment is done during CIRP. You have 32A recipe and you can easily come out. Third one is the attachment is happening after 2019 amendment, but CIRP starts after that. So again, that is a grey area which is not clarified till date. So it's going to be a challenge when you sell an asset with the writer of ED. I think Vinodji has sold one of the company where an attachment of ED is there. So obviously it impacts the valuation. But yes, there may be takers when there is no attachment, and if somebody takes it with attachment, he is with that risk. There is no clear-cut guidance as far as ED attachment is concerned with regard to 32A, except the case where the CIRP is started and thereafter the ED has come for attachment.
So basically, you are saying is that if the attachment is prior to the CIRP period, one has to be careful in dealing with this asset.
So around 6 cases I am handling for NCLT, where NCLT has said no for interference if attachment was already existing.
Ritesh, your view on going concern, if you have some, and secondly, the recent amendment on reconstitution of SCC, wherein all the parties who have filed the claim or the representative are required to be part of, especially with respect to operational creditors or other stakeholders who effectively are not likely to get any benefits or realization of those assets. So just wanted to understand the rationale behind that and if you have any views on this going concern.
Regarding going concern sale, if we try to go into why this is required, ideally speaking, if a company has some value, it should be resolved in the resolution period. And maybe you can say that because of some reasons at the initial days, clarity was not there. Some companies went into liquidation and then they must be given a second chance. But if we see the data, right now around 30-31 companies have been resolved, and by going concern sale, they have hardly realized anything. There has been around 3% or something, 3.something% recovery, almost less than liquidation value, just liquidation value has been recovered from that. So that puts a question mark whether if we get 4% or 3% in liquidation and around 30% resolution. So if the company was resolvable, why this gap is there? That is our expectation of the stakeholders. And on technical part, we have some adverse view on this sale as a going concern by Standing Committee of Finance of Parliament, even Insolvency Law Committee. I can quote one senior, very senior officers of government, which matters, whose opinion matters. It is just like a oxymoron, you can say, the living dead or something. That sort of concept it is there. And that we were concerned that this going concern sale auctions were getting repeated on and on, and that were actually reducing the you can say richer price, rather delaying the process. So that's why we came up with this regulation that you can exclusively go for going concern sale only for the first time. Then after it has to be merged with other options. So going concern sale, whatever it is, but it is not living up to the, you can say, expectations of the stakeholders as of now. We are keeping a close eye on it, how we can. Regarding this suggestion,
on the going concern, we now normally find the regulator issuing advertisement. In the same advertisement, he is saying that I will sell this asset, the going concern, if it fails, I will go for auction. So that's creating more confusion of the buyers who come back to us and saying, what is this going concern sale? What's the benefit or disbenefit of this? As you rightly said, it is creating more complexities rather than resolution. Sorry to go ahead on the SEC thing.
In ideal world, and we have taken some measures, like we have allowed some part sale or something. So ideally, this resolution, this commercial wisdom of COC and RP, they should be able to determine whether this company is resolvable, and it should be resolved in the resolution period itself, rather than giving a second chance and making this decision more of a tentative decision sort of, okay, कोई बात नहीं, बाद में देख लेंगे वहाँ पे going concern. Rather, so this has merits, demerits, but right now we are keeping a close eye on it. But as of now, only once exclusively it can be tried. Regarding the suggestion of Mr. Nipun that there should be some clarity over it, of course, much clarity has to be given, but whatever it will be, market is taking much more liberty than we could provide the legal framework, and even then the result is not encouraging, so that is a concern with this. And your second question was regarding?
Regarding this reconstitution of SCC and RD1, which all stakeholders effectively who are not likely to realize, the normal as official liquidator or liquidator we are finding to be getting more complex rather than smoothing of the process, because you have to invite everybody to be a member and there are hundreds and hundreds of pages sometimes.
Yeah, basically when we see the scheme of the board, RP works under the guidance of commercial wisdom of COC. But for the liquidator, we did not provide the earlier schemes, provisional code. It was assumed that he will be functioning under the guidance of adjudicating authority. Over the time, as it pans out that adjudicating authority has got preoccupied with so many things that maybe this filing of periodic progress reports with the NCLT is not an effective, let's say, checks and balance on the system. And because recoveries are low, so slowly and slowly stakeholders, dissatisfaction of the stakeholders come. And even RP, for a single person to determine very, so you can say, subjective matters like what should be the reserve price, whether I should go for as part sale, whether I should go for going concern. These decisions for a single person to take are really difficult. So it's a mutually beneficial arrangement where a stakeholder consultation committee can provide some comfort to the RP, and it aligns with the scheme of the board, because the board consciously taken this decision from the judiciary or executive that what should be done with this asset, whether it should be dissolved or liquidated. It has given it to the market of commercial wisdom. It did not go give this decision to the executive or judiciary. Same way, within liquidation, what should be done? It should remain with the market or the beneficiary. At least that will give them some satisfaction. Okay, whatever it is the best available option in the situation. Plus, there are some unfortunate, I would not say that mistakes from some of the professionals, which also fear of the issue among the stakeholders that liquidation पे like liquidator पे कोई control नहीं है, and they are doing just what they wish. So such sort of noises come. We have to understand that this use of this code is not mandatory. We have to live up to the trust of the stakeholders, expectations of the stakeholders. If they don't find value in us, they explore other avenues, other options, maybe voices of, you can say, other reasons will come forward. Liquidation is a very important activity or a very complex activity. Before this, some government officials were doing it, so they did not have some nuances that we right now have. That, like, there are no assets, what to do. Once dissolution, if some case comes, what to do. Such sort of issues, if a government official was doing that, would not have been there. But if a private person is there, private professional is there, such sort of issues come, and the demand for accountability also rises. As a liquidator, you have to act fair and also appear to be fair. So a stakeholder consultation is an effective way to achieve that. And we are trying to, and it makes at least life of liquidator easy in many cases, because it gives a comfort that when it approaches the executive authority, that look, this is the view of the stakeholder, they have been associated with the case since the initial CRP days, and this is also their view that this asset should be sold like this.
I fully appreciate your view, sir, but only thing is that, like in CRP, we had representation of the financial creditors and also representative of operational creditors to an amount. Here the thing is that everybody is kind of, irrespective of the amount or irrespective of the quantum, becoming a party, and sometimes it is becoming difficult for the liquidator to handle all these parties together, and decision making is getting slightly more complex in my view, practically.
I would say basically we provided for representative of all the parties here, and even in CRP we have, in COC we have FCs, then we have representative of OCs in most of the cases, representative of promoter is already there. So more or less the parties are same, because here also it has to be a representative, not all creditors. All OCs has to be there, only one representative has to be. So the process is almost similar. There will be slight difference.
Like this. So the issue which is now being faced by the liquidator is using CAI to be only a financial creditors or enterprise suspended. In liquidation as per the SEC, all the stakeholders can file a claim, and there is no clear-cut representation cap, which was earlier there in the regulation. Like previously, the regulation was saying that, let's say for government, there would be one representative. Let's say for shareholders, let's say two representatives. So there was a table and number cap for it. Now there is no upper cap. Now suppose there are shareholders and I am facing such a situation lakhs and lakhs of shareholders are there. It's a listed company now under liquidation. As per SCC, I have to give notice to them because they are fighting and there cannot be a representative. Because there is no provision under the law. It says that there should be one representative and what should be the manner of electing that representative. So suppose I have to conduct an SCC, I will have to invite everyone.
So there is one provision which is there for authorized representative of whether to shareholders or not. And it is, I remember because it is mentioned that you can actually, when you do the voting and it's present in voting, so that one representative can be actually elected by whoever is present in voting. And it is the onus is there for the first time, I think, on the liquidator to get those authorized representatives elected. That's it. So they mentioned one representative.
I did not wanted to mention, but there is a show cause with regard to SCC, where there is a complaint by the stakeholders who are not getting participated. There is no provision to elect any representative.
No, with the recent amendment, there is a provision for that liquidator should facilitate the selection of representative.
But there is no procedure that how from 10 lakh shareholder I would elect one. And then if I elect one, others have come and complained to the board that see, I am not represented. And when it goes to NCLT says, what is your issue? Let him be part of the SCC. So obviously as a liquidator we cannot say no. We will obviously consent. And then groups comes on being added in the SCC.
Basically, if you see the liquidation regulation earlier, even this one or two representatives that you mentioned, even that procedure was not given.
So that was the cap was there in this.
Not better. Two persons will be there, but how do you select two persons? That was not given.
Correct.
So it was left to the common sense or something.
But
if required, as you pointed out,
Yeah.
come here for taking inputs. But if you provide some guided path by some circular or maybe by amendment of regulation. Maybe our part has been quite agile in issuing regulation application.
So Nipun, we can give a conference algorithm kind of a thing. These are the suggestions.
So, thank you very much.
Sir, rainbow paper, which we have seen last year. So, rainbow is emerging also from Gujarat. SR steel also starting from Gujarat, slightly Gujarat for almost all the amendments.
So, next question, Pooja, to you. As you are aware that we were going to sell the assets, there are not other than encroachments and other things. We also face issues of certain authorities like sales and other departments having only an attachment to it, and liquidators and as well as the securitors are trying to sell the and maximize the value where this attachments come into play. So I just like to have your views on that aspect. And secondly, there has been a recent judgment in the Supreme Court regarding normally a liquidator when sells the asset carries an authority effectively to stop the liquidity process. He feels that there are alternate options available, or he can feel that there could be higher value which he can realize. And the purpose of the IPC code is maximization value. So how would this Supreme Court judgment impact that the entire liquidation process on these two aspects? We can just do it like this.
So the first question with reference to attachments, I think luckily we've got some recent very good orders where the same tax attachment which had been in fact prior to CIRP, forget about prior to liquidation, prior to CIRP there was this matter of the barrier polyesters and Linxon International actually, the liquidator of Linxon International, so that was in August 23. So wherein the same tax had attached the properties of the corporate debtor in 2015. Thereafter, the liquidator sold the assets, but the possession was not with the liquidator. So the court has recently said that the assets would remain of the corporate debtor only. And the sale tax department, yes, cannot become the owner of the assets. The attachment was there, but they are not the owners of the assets. And then attachment was released. A similar order had been passed in February 23 of this year only, which was of Pradeep Kumar Tabra versus this was of the CGST. see, I mean, I'm extremely familiar with these orders because I am a regular faculty with the GST officials trying to explain to them the deprioritization of the government dues under the Insolvency and Bankruptcy Code and how there has been intelligent differentiation between financial creditors and non-financial creditors.
But they continue to believe that if we are not a party to the proceedings, this order will not apply to us.
Yes, no, but luckily, you know, now there are these two orders. One is the recent order of that state tax department, the Paria matter, and this, in fact, in that particular matter, there were some tariffs which had been kind of taken in possession in 2018. But now the court has said that if you have taken possession of some assets of the corporate debtor, but you have not been able to sell them. See, once they've sold it, I mean, so that's when the GST department asked me, so what happens, ma'am, when, you know, when you've done attachments? And I said, you have, because the moratorium is a very beautiful section. I said, under section 14, when the CIRP also commences, you have to release all those attachments. They become the property of the corporate debtor. And even in liquidation, the moratorium is different. Of course, it is there, CIRP moratorium and liquidation moratorium is different, but then there is a moratorium. And the attachment, luckily, I think if we are aware, I think as a RP, as a liquidator, if we are aware of all the jurisprudence, we would be able to explain. Like recently, I had gone to EPF department, that was last month. They had attached all the, you know, in the case I'm handling all the bank accounts, so they have frozen all of them. So for them, when I went, it's not just, you know, I had taken with me case laws, I had taken the printouts of them, which I could actually give to them besides the letters they had not seen. I had sent 6 letters before that. They had not seen it. But when I went with the case laws, explained to them the provisions that yes, if the attachment is there, it has to be detached and it remains a property of the corporate debtor. So we, I think, as liquidators, we have to be aware of the latest jurisprudence. That is the only way we will be able to convince, you know, anybody else. Because we need to be convinced ourselves also, and that is the only way we can do that. So yes, these two judgments are very important, wherein the goods already attached, but then if the department has not recovered, has not sold them, they come back to the corporate debtor, become a part of the liquidation estate, and then as per section 53, the department will have to file a claim. And that has been you know, taken care of in both these judgments. And the recent judgment wherein about the liquidation for the AWA's fees, if I'm not mistaken. Yes. So in that particular case, yes, it has been mentioned that the liquidator could not have cancelled it. In that case, you know, a sale had been done that had been, you know, and the highest bidder bid on the reserve price. And thereafter, immediately, of course, there's an auto-generated mail which goes to the bidder that you are the highest bidder. And thereafter, based on that, but immediately thereafter, the liquidator cancelled the sale on the same day. So the Supreme Court has held that this liquidator cannot so without any reason cancel it. See, when you read about the synopsis, I read about the synopsis of that particular judgment in many places. But then when I read the entire judgment, it's a 54-page judgment, you need to see that the reason court, the Supreme Court actually disallowed, you know, the cancellation of the sale was because they said it was this, the cancellation was not a reason cancellation. They said that any decision which a liquidator takes, if you are rejecting the sale or you are accepting it, and you have to give a proper detailed reason. That why did you say it? I mean, the liquidator in that case just mentioned that because it is mentioned in my process document that I can cancel, withdraw, modify, slash, which is the general line which is there in any RFRP, in any liquidation process document. So basically, he just referred to that clause, and because of that, because I can cancel, I cancel it. Of course, it was for getting, you know, because there were two assets were selling to the other assets sold at a higher, making 50% more than the reserve price, and this sold at the reserve price. So he said, no, I want to try again. In a way, what the liquidator wanted to do was very good, was for value maximization for the assets. But if the rejection had been, I think, a little more detailed with the reason why were you rejecting that person's bid and why you were cancelling that sale, then I think the Supreme Court order would not have come. So, I mean, if you just read the headlines which are given in that order, it would just seem that, you know, the liquidator does not have the you know, option to cancel any sale, but no, he does have the option. But it has to be reason, or if you had any reason to believe that there was any fraud, or there was any malicious intent, or if there was collusion between the buyers.
Buyers.
So if all those provisions are there, so if there was such provision, that ought to have been mentioned in the letter which was issued to the successful purchaser, that this is the reason I'm cancelling, but not because of a clause that it is there in your liquidation process document. Then, if that's what the Supreme Court said. So that's, once I actually read the 54-page judgment, that is only which I could come to this conclusion after.
Yes, so there has to be proper reasoning before you really want to cancel this. Nipunji, while we are discussing on the going concern, there is a concept of section 30, scheme of arrangement also in the liquidation process. What are the issues, difficulties? Because courts normally, when we go with the scheme, also not only in liquidation but also in CRA process, ask us to go and take approval of all the operational, follow the provision of Companies Act effectively to complete the process. So while I am under IBC, I am required to follow, and that's a difficult situation because those stakeholders are effectively, interests are not impacted as far as the scheme is concerned. So your views on that, and whether the recent on the assets to be plan can come on in the real estate sector, we can have a specific asset wise or location wise plan, whether that can apply also in the liquidation process.
So sir, your first question is with regard to section 232. That is basically a scheme of compromise or arrangement. So just like we can propose it in the resolution plan also, same thing now can be proposed, and it was not there in the regulation plan. It came by way of a judgment, and thereafter IBBI amended the regulation, and now scheme is permitted. But the only catch is the regulation says that it should be done within 90 days from the initiation of the liquidation commencement date. However, when we go to court beyond 90 days also, and if there is a proposer who is ready to pay, normally courts are permitting because the complete cost of that process would be borne by the person who is proposing the scheme. So that is an important part. And in fact, in one of the cases from here in Ahmedabad, after almost 1 year, we got the scheme approved. It was not permitted, we went to ANCLAD permitted it, and now the scheme is also approved and implemented. So that is maximum impact application. If somebody wants to refer, it's a good case. And even after a year, court has permitted scheme of compromise and the liquidation.
But in that case, should I be going to take approval of shareholders and operational creditors for that scheme? Yeah.
So I think that issue did not come in this particular matter because the scheme was proposed by the promoters themselves. So there are two types of meetings which needs to be approved. So one is creditors approval and one is the shareholders approval. But my view is, if we read it in section 53, probably if the shareholders are not even going to consent, they are even otherwise not going to get anything at a So even if they get a consent of the creditors, I think the scheme proposed by a third party can also be approved.
But there are class of creditors again. There are secured creditors, they come out COC which approve the plan. Effectively their approval is there, but operational creditors, whether we should go to operational creditors or if they are not getting anything, they will not approve that scheme.
So sir, I suppose that 75% threshold is something which is much more than the 66%. So that is going to be an issue. And secondly, as you rightly said, the class of creditors is going to be important. And mostly if it's a secured and the claims are high, then probably if you get secured creditors approved, it will be easy to
You need to convince court on those factors. On the second aspect, on the sale of real estate assets and liquidation.
I must very frankly confess that in real estate, though the regulations now permit that you can do it project-wise during CIRP, still we are struggling with the cases where we are not able to make project-wise balance sheets because you can very well identify the assets, but the liability attached to a project to classify during CIRP is also a tough job. Then to classify during liquidation is again going to be a difficult task. So to sell an asset under liquidation project-wise, I think specific approval of NCLT would be required, and prior to NCLT approval, we will also have to run through SCC, what Ritesh was saying. But SCC will have to consent to it. Now the question comes, and we are facing a similar situation, and I think Chaudhary ji is handling that case, wherein specific project we have to make an SCC, get an OK, and then go to NCLT. Because there will be multiple projects therefore multiple assets. And to sell each project separately at the liquidation is going to be a task. So as such, there is no provision which is permitted. But yes, because they say you can sell assets in parcel, so you can classify that clause, get an approval from NCLT and get this.
So you have to apply the process on case to case basis depending on the situation of each corporate.
And I think specifically, as most of us are chartered accountants here, we will have to draw down specific project-wise balance sheet. Because assets and liabilities have to be allocated. Everybody is interested in asset, but when you sell a project, you have to also see the liability.
But if the liability, the lender is lend to the company without giving a specific charge on specific assets, that creates more complication and difficulty.
Yes. Nowadays, normally the charges are on project, but yes, if there is a corporate loan for the company, the allocation is going to be.
Because there is a general language in the draft with all the assets of the company are secured. Then you have to go to the more details on whether particular asset is mortgaged to a particular lender, and based on that you can classify. Thank you.
So I think that's one of the points. As we said, somebody took out under 50 and wants to come back. So we had did a similar case almost 1.5 years back. We amended the asset management and we also took pro rata expense of liquidation for the period they were outside.
Thank you. Thank you. So I think we'll put the house not open. If anybody has any question to the panel members, we'll be happy to take that.
So if anybody applicant comes after 2 or 3 auctions and he says I am interested in liquidation as a going concern, whether the liquidator is bound to put it on the liquidation or going concern or he is not bound to it?
So a similar situation arose in one of our matters and you can refer to the judgment. What we did was we put that request before SCC. SCC approved it for filing it before NCLT. We made an application to NCLT, see this is the going concern proposal. SCC is backing it. If you permit, we will do an auction on going concern. And it was approved by NCLT. So it's an NCLT indoor judgment. It is in the case of Devinder Jain, liquidator of Sandhya Prakash Limited.
Yeah, but Bombay NCLT they will take 3 to 4 months. Till that time again 4 months the minimum anything goes to the Bombay NCLT. Take minimum 4 to 6 months.
So that is the only way out because as per the regulations, we can't sell it after the first auction. That is what the interpretation was.
And second question, if some of the assets are sold, then also again one can go for liquidation as a going concern.
Yes, so if it is permitted by the court at any point of time, we can go for going concerns. If the valuation is coming more in going concern, say,
Yes.
my view is we can go. And the benefit is that the person will take the CDA completely. So sometimes benefit of losses we will get. Sometimes some licenses in the name of company we will get. Valuation sometimes comes more.
We sir want to say something on the same topic.
It's the same. My view is that if you have done 2 or 3 auctions and then some proposal comes, you should not, in the interest of transparency, respond to unsolicited proposals. If some proposal is there and you feel and distributors feel there is some value, you can again put one auction, but not exclusive auction.
Not exclusive, but jointly along with this first auction as a going concern, B auction as the individual asset.
So that should be allowed. But it should not happen now because this is my field auction. I was 40 crore, now I am getting 41 crore, let's sell it.
No, both the options are given.
Basically, it should be, the auction should be available to everyone.
So under this circumstance, no permission is required from NCLT.
As I see the regulation, NCLT approval is not required because basically
Satya Prakash.
go to NCLT approval, nothing like it. But as
He is suggesting it is not required. If you do it transparently and don't go by private citizen, that's what I think Ritesh is suggesting.
the interest of transparency has to be, hope I am able to convey that. It should not happen that this bid has come and this is higher than the my last.
No. That is entire public announcement will be done. Public advertisement will be there. Both the options will be there. Everything will be there. Because somebody has requested, I am not giving it to him. I am putting it on auction, and anybody can come and everybody can come and anybody can bid.
The present application said that this option should not be exclusively for sale as a going concern. Should have.
Yes.
As a going concern, we can go ahead and no requirement of the NCLT permission. Even after 90 days.
His client has taken NCLT permission. Much better.
That might be accepted.
Much better.
Because
Sir, every time going to NCLT NCLAT is easier said, but it is very difficult to get it.
Sir, otherwise for any liquidation sale, all you need to do is now discuss it with your SEC. Make sure that it is monetized properly in your SEC meetings. It is discussed and then you put in your sale. And thereafter, of course, you are having an SEC report with the NCLT.
Final sale will happen only after the NCLT.
Yes.
So take up till there and then take up.
Any other? There are people behind.
One question with regard to classification of the claim of the government authority, let's say GST or let's say GST or Income Tax Department holding the attachment order and without the attachment order, how they will be classified in the as per 53 secured at par with the FC or operational provision, if you can highlight on this.
Sir, my understanding is the GST department, Income Tax department, all of them are operational creditors only, and that is how they will be giving their claim. See, the only question with them being a secured creditor only came after the rainbow judgment, and that is only specific because the GVAT was like that. Now, if you look at the income tax, once the IBC came into being, the Income Tax Act was also changed, the GST Acts were also changed, the Central GST Acts were also changed, and they have said that IBC does prevail over their relevant tax, and they have nowhere ever mentioned that they are secured creditors. So when we are talking about GST or income tax, as per my limited understanding, yes, they would remain as unsecured operational creditors because that is the reason IBC. I mean, when you look at the code, you look at the preamble, you look at the principles, that is what it has been based on. IBC is an actual reorganization of the entire, insolvency regime, wherein there is deprioritization of government use, there is the differential between operational and financial is very much there, and there is a deliberate reorganization of the dues of the priority dues as per section 53. Only after Rainbow everybody started questioning
Was it an oversight of not amending the GVAT Act?
See that all the other acts were amended except the Gujarat VAT Act was left. Even the MBAT Act, I mean, if you could see the recent order, which is now the MBAT Act, there also they have said that IBC is going to be prevailing. So only Gujarat VAT Act was not changed. So that is the reason this question
The rainbow case.
As such, it is, you can't expect that all the state acts will be amended.
But all the
But it
central acts have been
generally
amended.
taken that central acts take precedence over state acts.
So all of
And even Supreme Court has openly admitted in this that had this fact been brought to their notice, maybe.
In fact, even right now in this latest judgment, which I was just talking about the state tax, wherein they were talking about the release of the attachments, again they mentioned about rainbow paper, that was only specific for that particular case and only for that Gujarat VAT because of state legislation. It actually quite went out of proportion, but it shouldn't have been.
Rainbow case is going to be taken on Monday, so hopefully Monday this will be over.
Monday it is for final hearing.
For review
He is the
petition.
RP, no? He is the RP, sir. Special case.
Any other question, please?
Sir, in the case of company acquired through the liquidation to going concern, closure is filed,
but order is not received. So in case of as a point of view of SRA, liquidator is denied to appoint a director in the company. Now, as a, on behalf of SRA, we need to finalize the books of account. If director is not appointed by the liquidator, then how we can sign the audited balance? In this case, what is the
Nipun.
Okay, yes. So I think one of similar issue, it comes in resolution plan also. And my suggestion to you would be that Institute of Chartered Accountant has issued a guidance note. If there are incomplete records, how to reconstruct the balance sheet. So that balance sheet can be reconstructed, there is no issue. And specifically disclaimers can be there. So you are only going to take into consideration what is available. Just like we have information memorandum, we have asset memorandum in liquidation. So that will resolve your issue. As far as the question of penalty goes, that what are the old...
His question was who will sign, director or something. Yes.
So, old financials, technically, you will have to carry forward the balances, whatever is coming in reverse. So, the financials which has to be handed over by the liquidator, if you see the order of top worth, that is of ICAI to Mumbai, a specific direction was given that the liquidator shall hand over giving effect to the assets in the balance sheet, because old balance sheets were not made available. So that is the only way out as far as the financials are concerned, and appropriate disclosures have to be there in the notes of accounts, as these things we are taking it from balancing figures. So you will have to reconstruct the balance sheet based on the assets available. So that is the only way. And for waiver of the old penalties, when you file it for ROC, that is also going to be an issue. You have to specifically take waiver from the NCA. There is no other way out, because ROC will ask for penalties. I think
there is also
Signature of the promoter, what about signature?
There is also one case law on that.
So of the liquidator, so I gave you the example of Kaufman. Specific order says that the balance sheet has to be made by the liquidator and given to the purchaser if he is taking CD as a
No promoter signature is
not required.
Sir,
if he is not traceable, we are having such companies that they are not traceable, they are in judicial custody, they are overseas. We all know such cases.
in our case, they are traceable, but they are not putting sign. They are
Except if the liquidator has to authenticate and give it to the new
given on
manager.
record.
sir, but liquidator is saying I have already transferred the sale and possession certificate to him, so I am the erstwhile liquidator. So you need to.
So then there is the only option is to go to tribunal to get a direction. Because if you have not asked for that relief when you are buying it, then it is going to be a trouble. Because once he is ex officio, he cannot sign.
Okay. And relief order is also pronounced, but final order is yet to be reserved.
Order is yet to be.
Order is reserved.
Okay, thank you. Anybody else? Thank you.
Thank you, panelists. I would request Senator to give a vote of thanks.
So we come to an end of the most comprehensive sessions, fully loaded with the all kinds of whatever possible, all kinds of sessions that we have tried to incorporate during the day. That includes cross-border insolvency and group insolvency, which are futuristic approach that will be coming up soon. The success of any conference goes first to the expert faculties that have traveled across the country to come here and deliver. So thank you so much all the faculties present here, Ritesh ji, Nipun sir, Pooja ji, Ravi Kapoor sir. And I thank you all on behalf of Ahmedabad branch of WIRC of ICAI. I thank you all the participants for the patient listening. Your participation and experts' presence have made this conference a successful conference. Such kind of participation will make us keep on doing such kind of conferences more and more, much bigger, much better. Thank you so much.